welcome everyone, distinguished guests, everybody on this call. Can we get this rolling with the national anthem, please? I believe they are going to play the national anthem. Are they being played?
Yes, they should play the national anthem.
Yes, sir.
Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign fatherland.
Thank you. Once again, good morning, distinguished guests, speakers, and participants, including the media that has joined us. It is my honor to specially recognize and warmly welcome the President and Chairman of Council of LCCI, Engineer Leye Kupului. Sir, you are most welcome. It is a great pleasure to have you with us. Can I have a hello, sir, from Engineer Kupului, sir?
He hasn't joined yet. He's yet to join.
He hasn't joined yet. Okay,
Yeah,
all right.
please
Thank
go ahead.
you. I should go ahead. All right. Okay. I will also respectfully acknowledge the presence of the Director General of LCCI, Dr. Chinyere Halmuna, FCA. Thank you, ma, for joining this call.
Yes, good morning. Good morning to everyone.
Great to have you, ma. We are also truly delighted to have you both join us for this creative and entertainment webinar themed Securing the Future of Nigeria's Creative Economy, Understanding Tax and Insurance for Sustainable Growth. We deeply appreciate your continued leadership and support. Moving on, I would also like to acknowledge the presence of our distinguished speaker, Mr. Abimbola Oluokun, FCA, FCTI, who is the principal partner, Abimbola Oluokun & Co., a firm of chartered accountants. Can I have a hello, sir, from Mr. Oluokun?
A very good morning to you, sir.
Thank you, sir.
Director General.
Thank you.
Yeah, thank you very much.
Great to have you, sir. Great to have you, sir. So he is going to be joined by another speaker, Mrs. Juliet Okon, who is the head of Alternative Channels and HNI, Leadway Assurance Company Limited. It's good to have you, Mrs. Okon. Mrs. Okon, can you unmute, please? Is she on the call yet? Okay. Moving on, let me recognize the presence of our own very chairperson, very ebullient Madam, or the chairperson of the Creative and Entertainment Group, Ambassador Elaine Obukome Ibru Mukoro. My chairman.
Hello, good morning. Good morning, everybody. Thank you, Mr. McMedal, Mr. President, DG. Thank you, everybody, for coming.
Thank you, man. Great to have you, man. I would also like to recognize the presence of all the executive members of the Creative and Entertainment Group on the call. Also not forgetting our esteemed members and all the valued guests on this call. I also will not leave out the media who are, I think I've seen one or two on the call. Thank you all for joining us. Thank you for taking the time to be a part of this interesting discussion this morning. I implore you to stay tuned as we begin what promises to be an insightful and engaging session. My name is Segun Mark-Medal. I am the Vice Chairman of the Creative and Entertainment Group. So without much further ado, so let's get this party started. Again, let me see whether Mrs. Juliet Okon has joined. We would like to hear from you, wherever you are. Okay, can somebody reach out to her to let her know that we have started this conversation?
Now, I'm trying to grant her access to unmute herself. Just give us.
Okay.
Thank you, sir.
Okay. Okay. So while we wait for her, let me just take the ball rolling. Can somebody tell me what is your expectation from this conversation this morning while we wait for Mrs. Okon? Can somebody tell us what he or she is expecting from this conversation this morning?
Good morning. This is Juliet.
Good morning.
Thank you so much for having me.
Mrs. Okon, great.
Yes, please. Thank you.
Yes. Okay, so thank you very much. So it's going to be a very, very interesting conversation, I'm sure. It would be nice for us to, at intervals, to actually put on our video. It will make a very good screenshot if we can do that at interval, especially even before we start now. If you can put on your video, it will be very nice. I don't know why my video is not showing. Okay. So can you please put on your camera? Adebipe, will you please take a screenshot of all the participants?
All right, so I'll do that, sir.
Okay, so all of us, please, let's put on our cameras. Thank you. Are you done? I don't know why my camera is not. My camera is on. I can't see myself.
Yes,
My
I've done.
village people. Okay, all right. So I will just yield for the next item on the agenda. Thank you very much, everyone, for your cooperation. So, Bipe, what's next?
The chairperson's remarks, sir.
Okay. Madam Chairperson.
Kindly unmute yourself, ma'am.
Ambassador Ibru Mukoro, please. Your opening remarks.
Sorry about that. Good morning, everyone. My name is Ambassador Elaine Obukome Ibru Mukoro. I'm the chairperson of the creative and entertainment sector of the Lagos Chamber of Commerce and Industry. I want to say a very warm welcome to everyone. On behalf of the creative and entertainment sector, I'd like to say a very big thank you to Mr. President, of the Chambers, Engineer Leye Kupolui, for taking time to join us. DG of the Chambers, you're welcome, madam. Thank you so much for your time. On behalf of the Lagos Chamber, on behalf of the entertainment sector, the creative and entertainment sector, I'd like to warmly welcome you to this timely webinar themed Securing the Future of Nigeria's Creative Economy, Understanding Tax and Insurance for Sustainable Growth. As the leading voice of the organized private sector, the LCCI remains committed to bridging the gap between business and government. It is imperative that tax compliance is duly understood by the creative sector. We bring the sector to limelight today. For many creatives who don't really understand what the tax-free threshold is for personal income tax and exemptions, this webinar will bring to light the understanding of the new tax laws and what it entails. The aim and objective of this is to make sure that we move the understanding of what the new tax laws are for people who don't understand it. And the insurance, why tax compliance ensures standing with the state, we want to establish that insurance is sorry, 1 second. The shield of insurance. While tax compliance ensures standing with the state, insurance ensures resilience against the unexpected. Risk management for creative professionals whose assets are often intangible. Insurance provides the invisible infrastructure necessary to jump higher, whether it is protecting intellectual property, managing liability, or securing equipment. Insurance is the secret sauce that transforms the hustle into a sustainable enterprise. Nigeria's creative sector continues to demonstrate remarkable potential, not only as a cultural force, but as a significant economic driver. However, for this growth to be truly sustainable, it is essential that we strengthen our understanding of critical frameworks, such as taxation and insurance, which underpin long-term stability and scalability. Today's session is designed to provide clarity, insight, and practical direction on these important issues. We are privileged to have an esteemed panel of experts who will guide us through these conversations. I encourage everyone to engage actively, ask questions, and take full advantage of the knowledge being shared. Thank you for joining us. I wish you a highly productive session. Once again, you're most welcome. Thank you for joining us. Thank you very much, everybody.
Thank you very much, our able chairperson, Ambassador Hebrew Mukoro. That was short and to the point. I don't know whether the president has joined us. Mr. President.
Hi, Shagun. I will take the president's remarks.
Oh, okay. All right. Thank you very much, DG. Okay, thank you
Yes.
very much. So I will yield.
Okay, so good morning, everyone, and thanks for joining this call today. To the chairperson who just spoke, thank you very much, Ambassador. Thank you for your leadership and for coordinating this group and making it possible for us to host this webinar today. The speakers for today, Mr. Abimbalo Oluokun and Mrs. Juliet Okon, I want to acknowledge you and thank you and really, really appreciate you for accepting to speak to us from your wealth of knowledge and expertise. I also want to salute all the ESCOs and members of the Creative and Entertainment Group and other members of the Lagos Chamber of Commerce here present. I say hello and thank you, Mr. Vice Chair Segun, for emceeing this event. Indeed, the President is unavoidably absent, and I'll just read his remarks. It is a privilege to address this distinguished audience at a time when Nigeria's economic trajectory is being reshaped by both domestic structural realities and evolving global uncertainties. The Lagos Chamber of Commerce and Industry, as a leading voice of the private enterprises in sub-Saharan Africa, remains committed to advancing strategic conversations that unlock sustainable growth across critical sectors of our economy. Today's theme is not only timely, but also fundamental to Nigeria's economic resilience. The macroeconomic environment is currently being shaped by heightened geopolitical tensions, persistent volatility in global oil markets, foreign exchange pressures, and elevated inflationary trend. The consequences are a tightening of fiscal space, exchange rate instability, and sustained inflationary pressure. These continue to erode purchasing power and increase the cost of doing business. In this context, the urgency of economic diversification cannot be overstated. It is within this framework, therefore, that the creative economy emerges not merely as an alternate sector, but as a strategic counterbalance to oil dependency. Unlike crude oil, which is susceptible to external shocks, the creative industry is driven by human capital, innovation, and global digital distribution channels, making it inherently more resilient and scalable. A critical pillar to this transition is taxation. In a period of increasingly uncertain oil revenues, broadening the non-oil tax base has become imperative for fiscal sustainability. The creative sector, given its scale and growth trajectory, represents a significant opportunity in this regard. More importantly, taxation must be repositioned as a gateway to formalization and financial inclusion. When properly structured within the tax system, creative enterprises gain legitimacy, improve access to credit, and enhance investor confidence. This is particularly critical in an environment where access to capital remains constrained and interest rates are elevated due to inflationary pressure. Now, while taxation drives formalization, insurance provides the foundation for sustainability and risk resilience. The Nigerian creative economy operates within a high-risk environment characterized by production uncertainties, piracy, contract disputes, health risk, and increasing digital vulnerabilities. Unfortunately, insurance penetration within the sector remains extremely low, reflecting both limited product innovation and low awareness among creatives. To address this, there is a need for bespoke insurance solutions tailored to the creative value chain, covering film production, live events, intellectual property, digital assets, and personal risk for creative. Equally important is integrating insurance into financing structures, ensuring that creative projects are not only fundable but also protected. Nigerian music, film, fashion, and digital content already enjoy strong global demand. However, the country captures only a fraction of the potential value due to weak monetization structures, limited intellectual property enforcement, and inadequate financial systems for tracking and repatriating earnings. If we align these elements effectively, the Nigerian creative economy will evolve from a largely informal sector into a globally competitive industry, capable of generating sustainable growth, creating jobs, earning foreign exchange, and strengthening our economic stability. Therefore, I thank you all for being here this morning for this all-important conversation, because it will help us to make progress in the areas that we need to make progress for our economic development. Thank you very much for listening. Is the MC still on the line?
Thank you very much. Thank you very much, Dr. Chinyere.
Oh,
We
thank you.
appreciate your time. All right, Segun.
Sorry, I was muted. I didn't know I was muted. Okay, thank you very much for reading the President's address, DG, Dr. Chinyere and Mona. We are very, very happy to have you join this very important conversation. Now, it gets more interesting as we are set to explore the theme, securing the future of Nigeria's creative economy, understanding tax and insurance for sustainable growth. Now, it's a very, very important for us, this theme is important for us for a lot of reasons, including the following. It empowers Nigeria's creative professionals with financial knowledge to protect our income, our assets, and our futures. It accelerates the formalization of Africa's most influential creative economy, making it more attractive to domestic and global investment. It will also equip policymakers, and others to gain high-level intelligence to design tax and insurance frameworks for the creative industry. So this and more we are going to learn as we invite our first speaker to give us his presentation. I believe he has a presentation. I believe he has some slides to share with us. I don't know whether we have enabled him to share his screen. I would like to call on Mr. Abimbola Oluokun, the principal partner. I know that the professionals are very particular about their titles. So let me take that again. Mr. Abimbola Oluokun, FCA, FCTI, the principal partner, Abimbola Oluokun and Co. Are you ready for us, sir? We will happy to have you at this point. I believe you have a presentation ready.
I am ready for the presentation, and I'm very glad to be here. But I've equally sent it to Madam Chair earlier when she requested for it. So what I want to do is just to talk to those slides from here, and then if there's anything we have to add, then I can now take it off from there. But the slide is already in the purview of Madam Chair, so they can share it from that place.
Okay, they are sharing. Thank you very much, sir.
So can I start now?
Yes, sir. The floor is yours.
All right, sir. I'm very glad to be here. But let me quickly take the protocol by saluting the president, our president, the president of the Lagos Chambers of Commerce and Industry, Engineer Lev Kupoluyi, unassuming president. Yes, very intelligent man, and then we highly revere you. The Director General of the Lagos Chambers of Commerce and Industry, a cerebral lady, my professional colleague. Good to see you, and we thank you for approving this webinar for us. Madam Chair, I'm very grateful for you to have beckoned on me that I should come and share my thoughts with this, and then I congratulate the creative sector for them to have accepted me. What I've done is to share my thoughts, and I've divided my slides into three segments. Number one is my opening remarks. Number two is the preamble. And then number three is the specifics, the area of concerns. If you look at the preamble is deliberately designed to be in line with the theme, understanding tax reform for sustainable growth. Then the specifics is to be more in line with the securing the future of Nigeria's creative economy. So my opening remark, you can't get it from the slide. It is on the economy. You all will agree with me that Nigerian economy has been passing through severe stress for quite a long time. Yes, the economy was not growing. It was sick. It has been on the sick bed for a long time. Not only that the economy is sick, it was even taken to ICU, intensive care unit, and it's not responding to treatment. The small businesses were suffering. They don't have access to adequate funding, and yet they have been taxed to their marrow. Our tax system then was regressive, targeted at the poor and the poorest in the economy. So I'm qualified now to say that majority of the Nigerian citizens were actually moving around what I refer to as vicious circle of poverty. That will be my opening remarks. So on the preamble I've said earlier that is in line with the theme. So why the Nigerian tax reform? How the tax reform will sustain growth economy? I have about 7 points here. Sorry, can you hear me? Hello?
Yes, we can hear you. Please continue.
Lovely. So how the tax reform will sustain growth of the economy? I've been informed that I have only 30 minutes to do this presentation. So my time now starts now is 11:36. So I'm looking at my time here. So I will comply with that time. So how the tax reform will sustain growth of the economy? One is by boosting revenue for public investment, encouraging private sector's investment through competitive rates, and enhancing efficiency through simplified compliance. We'll get it when we get to the specifics. Number two, this tax reform will foster long-term stability by expanding the tax base, reducing distortion in decision-making, and enhancing economic diversification beyond the volatile sector. I'm referring to oil and gas. Number three, reduction in personal income tax will increase household disposable income, thereby drives consumption and economic activities. Number four, this tax reform will enhance revenue mobilization. Tax administration reform diversify revenue streams and strengthen the value-added tax to provide stable funds for infrastructure, health, education, which support long-term growth. Then number five is modernization and compliance, implementing digital technologies such as e-filing system, which improves tax administration efficiency, reduce opportunity for corruption, and make compliance easier. Then macroeconomic stability. The predictable tax system enhances investors' confidence, reduces economic uncertainty, and manages inflation. Yes, this tax will do that. And when we get there, we'll share thoughts on that. And the last one is the economic inclusion. This is done through targeted tax reliefs for small businesses and low-income earners. Therefore, tax reform is not simply about collecting more revenue. It is about building a stronger economic foundation, a well-structured tax system that broadens revenue sources, encourages investment, supports private sector growth, and strengthens public accountability. So that is my preamble for the economy, and then we all can agree with that. So the specific, if you look at the slides, I have about 10 in the content. I will not go through that because of want of my time. So I will just go straight to the specifics. I'm here because of the creative sector of the economy. It was in 2014 that the Nigerian economy was rebased. I remember vividly that the then Minister of Finance, our dear Madam, the Director General of World Trade Organizations now, Mr. Okonjo-Iweala, was the one that co-opted this creative sector into the economy. And when they were invited, the economy was rebased. And then our position in Africa was about 5th position. So when they co-opted the creative sector into the economy, and they valued their activities into the GDP, our economy was redoubled, and we were moved back to our rightful position, which is the largest economy in Africa. Yes, but in this creative sector, since that time, what are they really doing, and what are they in the economy? If you look at their contributions to the gross domestic product, is in excess of 12%. Oh yes. And this surpasses the contribution of the oil and gas and the mining if you put them together. And in terms of job creation, creative sector is employing about 4.2 million people into the economy, very huge, very massive. And if you now look at their production from now to 2027, what they are operating on now is about $5.6 billion US. Their projection for between now and 2027 is about 20 billion. And then between now and year 2030, we will be about 100 million into the covers of gross domestic product of Nigeria. This is very huge, and we need to commend them. So, but having said all this, even the multiplier effect of this sector is about 150%, you know, meaning that if you put $1 in that sector, the multiplier effect on the global economy in Nigeria will be about $2.5 as per unit of their product. So it's very massive. So their multiplier effect is about 150%. Very good. They are the one that diversified the economy of Nigeria to this high level expected performance. But at the same time, I want to go to specifics. This sector, as brilliant as they are, as prosperous as they are, if they are not careful and they are not put their house in order, they will be paying their taxes in excess. Oh yes, tax law, Nigerian Tax Act, Nigerian Tax Administration Act, Joint Revenue Board Establishment Act, and the Nigerian Revenue Service Establishment Act are there to assist them. But what they must do is what I'm going into now. Firstly, I want to address the issue of informality in that sector. You know, if you look at the percentage of people that are operating in this sector, they are full of informal. Informal means that they are not registered. So my advice to them is that way forward is that they should approach Corporate Affairs Commission. Number one, go and register a company, and with a well-defined name. The name like consultancy is not acceptable for this sector, because in the Tax Act, it says that if you are professional services, you are a consultant, you are a big company. So for you to benefit from these tax laws, you have to be mindful of the name that you call yourself to the Corporate Affairs Commission. Number two, obtain a tax ID. There's no controversy about that. If you have not been filing before, you may not have any. But way forward, you can use your TIN number as your tax ID. Then with that, go and open a bank account. You know, with the opening of bank accounts now, there's another code that you should have. It's from EFCC. They call it SCUMOL. SCUMOL number. It's very compulsory, although they have not been making issues with it. But later on, there will be an issue with that. SCUMOL is the Special Control Unit against money laundering. It's a code, it's a number from EFCC. They must have it. Why you must have it is that majority of people that are operating in this sector, they have foreign affiliation. They earn their revenue both in Naira and then in dollars, in pound sterling. So it's very, very key for them to have that number. The meaning is that even there's no money that cannot enter your bank account. Just make sure that you can defend it. And that number is very germane. Then what you have to do about that is that you should now know that you are no more an artist. You are now an economic unit, digitized in surveillance ground, and then you must be ready to pay your taxes. Now, success in 2006 will depend on your portfolio, not on your ability to structure your earnings. Proper documentation is very key. I think I have to take more time on this proper documentation. You know, as you are now in the informal sector, the only thing that you can do to comply with these tax laws is for you to keep accurate recording, most especially that you that are earning your revenue from foreign currencies. The tax law says that the planning for annual financial statement is no more annual, it's now on daily basis. If you are earning your money from foreign exchange, from foreign currencies, just know that immediately you earn that money, you have to convert it immediately. So what you have to do is that success in 2006 will depend not just on your portfolio, but on ability to structure your earnings, proper documentation of your expenses, and navigate the name. Professional services or consultancy is no more required. Make sure that if you're a graphic artist, let it appear in your certificate of incorporation. I'm a filmmaker, I'm a musician, let it be so clear. And do not worry about how to get your tax identification number, because the government has said that you can use your TIN number to identify yourself, pending the time that Nigerian Revenue Service and the Joint Tax Revenue and Joint Revenue Board will finish what they are doing underground to give us new tax ID. That now will take me to definition of small businesses. And that's why I am so concerned that as brilliant as this sector is, informal sector is supposed to be a transition stage business arrangement. If you stay there for 6 months, you should know that you have to migrate yourself to the formal sector within 1 year, because the benefit of this tax rests with the small businesses. The definition of small businesses has changed. It's no more the number of employees. It is now depends on 2 factors, on your turnover and your fixed assets. On the turnover, the government is saying that if your turnover is between 1 naira and 100 million, you're a small business, provided your fixed assets that you are using to run that revenue doesn't more than 250 million. Very huge. It used to be 25 million before, but this government is so magnanimous that said, okay, let's expand it. So 100 million threshold and 250,000 assets classify you as a small business. Why that? It's because, and that will link me to the value-added tax. He said, if you are working in that threshold, the company income tax completely and development levy don't pay. Meaning that in small businesses doesn't have business paying company income tax and don't have business paying development tax. What he's saying that both your revenue, as huge as maybe 80 million, go home with your revenue, go home with your cost of sales, and don't pay tax on them. So that's very huge, and that is why the government decided to give them exception for VAT is that you are a small business. By the time you are operating in the market, don't add value-added tax to your invoice, because that addition may not make your prices to be competitive in the market. So what you have to do is that don't charge it at all, meaning that the prices that will be charging will be a penetrating price and be competitive, and your business will grow and you have more profit to plow back to your business, and your revenue and your business will grow. The meaning of that is that government is not interested, and I've said it in another forum, that government is not interested in taxing really. What they want is to boost the economy. If the economy grows, revenue will grow, and the company will pay their tax with ease. So that is the bottom line of that small businesses. But at the same time, value-added tax has two sides. It has demand side and it has a supply side. On supply side is that when you are using your invoice, government said, okay, don't pay. And why is this said? That's what I've said earlier, that it's because of your pricing. So you can charge a penetrating price that enable you to enter the market. And from there, you can get more money, you can get more profit. You plow back to your business and you make more profit and your economy will grow. Later on, government now can be getting more money from the revenue that you are generating. On the demand side is that if there are some items that carry VAT, you should pay. Although I don't want to go into technicalities that can cause a lot of controversies, but that's the position of the government. Because as you are growing, it's likely that early enough, you cross that threshold to when you will be paying your taxes because your revenue is now more than 100 million. But mind you, if you are not paying that VAT, there's a punishment and they can even take it to be non-compliance. Because if you have raw materials and assets to acquire or to purchase and carry VAT, if you don't pay that VAT, by the time your consultant, your accountant want to prepare your financial statement at the end of the year, those expenses will be disallowed because you did not pay VAT on them. It's not for punishment. Government is just saying that, you to be my agent. Be my agent. If they say you should pay this, pay it. So at the end of the day, I will allow that expenses in your profit and loss account. If it's an asset, if you acquire them and it carries VAT and you don't pay, by the time you cross that threshold, the government will penalize you by disqualifying that asset. I know I'm talking to a businessman, but I don't want to sound too technical because I can explain that one later. So, but that's the issues of the value-added tax. On the issue of the registration, okay, you don't even have to register for VAT at all, since you are still a small business. That would take me to the new personal income tax structure, because whether you are creative, whether you are a small business, individually, we must pay tax. Our tax graduated rate now is, our tax system now is progressive and is beneficial to the low trading and then the small businesses. The tax rate is we call it tax graduated rates. It started from 0% to 15%, 18%, 21%, 23%, and 25%. Those are the graduated rates that leads you to effective tax rate. But there is a lot of incentives there. If your taxable income, I use the word taxable income, is 800,000, because what we are saying about taxable is that if you have gross income about 1.5 million, and you calculate all your reliefs, like your rent, like your NITF, HMO, and it gives you the net one to be 800,000. That's your taxable income. If it's 800,000, go home in peace. No tax for you. Not that 800,000 is your gross income. It can be higher than 800,000. It can be 1.5 million. It can be 1.2 million. For people that's in that bracket. So there's a lot of relief for that. The exemption threshold, I think I've said that. I don't have to read it again. The new tax band structured progressively. It is crucial to understand that this applies to the taxable income, gross income minus your reliefs and whatever. Now, the corporate tax rates, the corporate tax rates. If you compare Nigeria with other countries, like Kenya, like Ghana, like South Africa, I think our rate is the most competitive now on that, 30% now, and then we are projecting that maybe in 2 or a year to come, can reduce it to 25%. In Kenya too, it's about 25%. In Ghana, it's about 27%. So there's another development levy, which is now 4%. It has eradicated the tertiary education tax, that levy. I don't want to go to those technical ones. I want just one that relates to business. Let me talk on digital assets, the crypto and non-fungible tokens, because it's part of the area of concern that was sent to me. Government has legitimized the cryptocurrency now. But listen, if you are a graphic artist you're a filmmaker, you have to keep 2 separate accounts. You know why? Government is more interested in that your line of business. Crypto may be secondary. So what we have to do is that all the revenue, the expenses that we are generating on that digital assets, you compute it normally. On your crypto, have another account. How you play it, the revenue, the expenses. By the time you get to your gains or profit, just take it, bring it to that table. If you're an individual, bring it to the table of tax graduated rates and compute your tax on it. If you calculate it, effective tax rate may not be more than 17%. Sorry, if you are not getting me, let me know. It may not be up to more than 17%. But if you made a loss on that crypto, please stay with your crypto account. Don't bring that loss onto the table of profit and loss account for the graphic or any other film industry, for music, for whatever that is playing under creative industries. Government knows what they are doing, that if you make a huge, my understanding of this crypto is like a gambling or whatever, but it has been legislated. If you make profit, bring the profit to the tax table. You want to tax it. But if it's a loss, stay there, relieve your losses until you started making profit. I think that one is clear. So, and the company income tax on that is, the capital gain tax on that is 30%. Why does it have to be 30%? Because capital gain is supposed to be 10% before. We've realized that there's a game that's going on. People that on these tax reforms, all the minds, all the brains were put together, even the actors. So we know what is going on. Government want to eradicate a situation where companies now use their profit and loss account on their legitimate business. They're supposed to charge 30%. They will now transfer it to the asset disposal account. They will call it gains from the capital disposed. They will not charge it 10%. So in order to solve that fraud and to let the accounting and then the taxation be transparent, they said it should be at the same rate. It's not punitive. It's just is a way of coping tax evasions and then tax avoidance. Then for software licensing, there's I think I have to read this one. Designer rely heavily on imported digital services and their subscription. The tax law on this is on self-charge mechanism. If a non-resident supplier does not charge Nigerian VAT, the Nigerian recipient is obliged to self-account and remit it, and remit the VAT to the Nigerian Revenue Service. The simple meaning is that, there are some licensing that goes with the software. You can register, you can subscription, whatever. If there's no VAT there, and you cannot convince because they are not residents in this country, you must quickly input VAT on 7.5% onto that price and pay it. If not, during the audit, there may be a lot of challenges. I want to avoid this holistic reform of the tax laws. I want to go to the compliance requirements, because that one is very key. I think it's one of the concerns they sent to me. Before the non-compliance risk with this tax law is like someone is testing the power of Mr. President. What I mean is that compliance requirements says that you must register and document. So meaning that mandatory thing, all taxpayers, including individual, non-resident businesses, and digital services provider must register and obtain a tax identification number for all financial transactions, including the schema that I said earlier. There's no controversy here. You can use your TIN number as your tax identification number for now. Record keeping is very key because, and it's not very key for this creative sector because of the way you earn your income. your turnover, your revenue, meaning that if you don't keep, record keeping is now on daily basis. There's no way you can transact without using your invoice. You know, what you have to do, the money the inflow that is coming from abroad, immediately enter your bank account, quickly convert it to Naira, use the spot rate. Don't wait till the end of the year, because end of the year is maybe the year you now prepare your financial statements. If you do that, you'll be paying your taxes in excess. Our exchange rate in Nigeria is very volatile. The rate in Nigeria in January will be different from the one in March. The July may be terrible. At the end of the year, it's always skyrocket. So what you have to do on accurate bookkeeping is on daily basis. And then I want to advise that now that you are now coming to the space of this prominent position in taxation, make sure you expand your team, your board of directors. Your board of directors in the sense that let accountants, let the tax practitioners, let the financial experts be part of your team. Expand your rising, expand your, not your peers alone. You should get what I mean. So have a consultant that's the accounting background, is a finance person, is a tax person that can advise you right from your negotiation stage. When you are drafting your agreement, when you are your contract document, let them guide you. What's going to be the tax implication of all this? Because we are saying this, and I'm shouting that compliance is like we are testing the power of Mr. President. So, because if there's no clause of who's to pay this, if you don't pay it, it is you that will bear the brunt. Although there's a lot of penalty. So, long period of time, all these things, because record keeping, the comprehensive financial record must be maintained and preserved. As you are keeping an online record, keep also manual. Let your accountant be aware of that. I'm sure all the accountants were so professional. So you keep your manual filing and payment deadlines. You know, filing is one thing, payment is another thing. Filing has a time frame. You know, annual tax returns, employee must be, from personal income tax must file between January 31st of each year. And self-assessment. Self-assessment means that you don't have to wait for any consultant. You can approach the tax authorities and say, okay, oh, this is the year is going to an end. Can I file this? Yes, you can file this and pay. Maybe if audit comes later, the additions or minus, that one can be resolved. Reconciliation can be done. The new operational compliance, most especially for digital, people that are operating on this space, if filing and real-time reporting are mandatory, although this one has a threshold. It has a threshold of, if you are now big, you are operating in a 5 billion space. But tax is very flexible, you know. Make sure you don't transact business verbally. Raise your invoice. So, because during the audit, how do you get this revenue? How do you get this turnover? My friend, go and check my bank statement. It will give you a lot of issues. And when, don't push tax authority to the issue of issuing OBJ. That is, now will be final, and then you now be dragging yourself to ombudsman, which I don't want to discuss here because that one may be too technical for you. But just align yourself with the rules and regulation of this new tax laws. Specific corporate requirements. Large companies with turnover of 20, okay, those ones may not need this one. But at the same time, I've given Madam the slide. This one I'm using to present, I've equally sent it to her. So you can have more proper understanding. Then on withholding tax, the withholding tax still has the same thing with value-added tax, that since you are a small business, if you are dealing with a client that wanted to deduct your withholding tax from your pricing, it's two-way thing. If they shouldn't, and you can explain that. It's like, let me even read it. Small businesses exemption. Small business turnover less than 100 million are exempt from withholding tax. That one is sacrosanct. Mechanism, like if you now a designer whose turnover is 40 million, issue an invoice to a client for a 3 million. Withholding tax of 10% should not be deducted from that service. You give him his full money because it's under a threshold of 100 million, you know. So, but that agency, the two of you must have a valid TIN number. So the withholding tax, corporate bodies is 10% for professional fees, and individual is 5%. Compensation for the loss of employment, you know, for a designer working house who faces redundancy or layoff, the Tax Act offers a significant shield. The tax exempt threshold for compensation for the loss of employment has been raised from 10 million to 50 million. So I wouldn't know if there's an arrangement that someone is laid off. Is confirmed that it's in the formal sector, and the payoff they gave to him is about 50 million. You can go home with it. There's no charge tax on that. It's not. So compliance penalties, you know, penalties, the cost of non-compliance has been skyrocketed now to avoid evasions. All these ones, to me, they are minor. There's one that is not there is not explicit, and that's what they are going to use. They can see this certificate of incorporation. I was in a forum, you know, when we are warned, even the consultants too, like me, that no matter how smart you are, don't join any falsified figures. What they will do is just to take that your license, you know. This penalty of the cost of non-compliance is failure to register, 50,000 and then 25,000 subsequently. Those ones are the whatever. If it goes beyond that, you can be sanctioned. Your license can be removed from the professional angle. I've prepared a summary. I want to read it, and then from there I will conclude. And if there's any question and answer, we can now take it up with them. So some executive summary says that the enactment of the Nigerian Tax Act 2025, signed into law in June 26, 2025, alongside the Nigerian Tax Administration Act 2025, the Nigerian Revenue Service Establishment Act of 2025, and the Joint Revenue Board Establishment Act 2025, represent the most profound structural transformation of the Nigerian fiscal landscape since the return of democracy in 1999. This legislative instrument, collectively referred to as the Tax Reform Act of 2025, are not merely amendments, but a complete overhaul designed to consolidate the fragmented tax systems, expand the revenue base, and align Nigerian fiscal framework with global best practices. The full implementation commences on January 1, 2026. This reform fundamentally alters the compliance obligation, tax liabilities, and operational structures of businesses across federation. For the Nigerian creative sector, the reform presents reliefs and rigorous enforcement. The narratives surrounding these laws are often focused on the exceptions of low-income earners and the consolidation of multiple taxes. On one hand, the new legislation offers expansive exemption for small businesses across all the sectors of the economy, including creative sector. Remember that when registering a business, avoid generic terms name. I've said it earlier, like consultancy. You are not a consultant. Let them know that you are a graphic artist. Let them know that I'm a filmmaker. I'm a musician. Simple name. So we enjoy this benefit from the small businesses. If you are primarily a production house, digital printing and production, you may attract different tax treatment than brand consulting. What do you mean of brand consulting? I'm a content manager. I'm a content consultant. Those words are not acceptable under this term. This must be reflected reality to avoid fraud charges. I want to say it here. Because of this sector, because of your lifestyle, you know, there's no, the tax authority, you are the focus. Because an individual will say that I'm not generating anybody, but I'm not generating much revenue. but it's wearing Rolex. Rolex is using long chain in his neck. You know, is parading himself with dips. If you value that and it's more than 250 million, you know, they're a big company and they can, to the extreme, you can value it and apply tax percent on it and you pay it as your taxation. As prosperous as you are the darling of the economy because you are most prosperous. You are the one that's returned us to the largest economy in Africa. So I thank you very much for listening, and that's my presentation. I can now wait for your question and answer, if there's any. Thank you. So that's it. Thank you. Am I still on?
Yes, you are.
Yes,
Yes. I
Yes,
have a
you're
few
on.
questions. I have a few questions.
I think
Madam Antoinette, good afternoon. I'm so sorry. My name is Andre. I'm the Director for Programs in the Creative Industry. So I'll be taking the question and answer session so that it will be well moderated. Sorry I jumped into you because I know he had already said he was done. But first of all, I want to thank you, Mr. Bimbola, for your very wonderful presentation. And hopefully we've been able to get a lot of information from this. And we're just going to jump into that space now. Just by way of housekeeping or protocol, if you do have a question, we can only take, because of time, we'll probably take just 5 questions. We always like to be fair to women, so we'll take 3 from women and 2 from the men. Where there are no questions from the women, we'll just augment. But if you do have a question, kindly indicate by show of hand. And I can see one hand. That is apart from the first question that was going to come up. Please, I'm sorry, I can't remember the first name, Antoinette, yes. So Antoinette, please go on with your question and just be straight to it so that we can press for time. Please go ahead.
Sorry, I didn't have any question.
I think it was me
Okay.
who
I
said
thought
I
you
have a
did raise your hand
question.
for a question. Yeah.
I
All
think it
right.
was
So
me.
Rohan, Ronia, sorry, I said Rohan. So I'm so sorry I messed up your name. Ronia. So please go ahead with your question. Thank you.
Thank you, Andre, and thank you, Mr. Abimbola. That was very thorough. First of all, I would love to have those slides. You know, it was a little bit too fast for me. So if you could please share those slides with us, and so we could also sit with our own accountants in-house and review all these things. That would be a great help for us to actually make sure that we comply. And the other question I had, I wasn't clear. So if you're saying that at the threshold of 100 million, we're not paying tax and therefore we should not be charging VAT, is that what you meant?
Should I be responding to one-on-one?
Okay, no, Mr. Abiola, because there is no other hand raised, so you can please go ahead and answer the question. Yes.
Okay. Madam, thank you for your question. It's a brilliant one. The VAT, because of your threshold, the law says that don't even register for VAT. And the meaning is that in your pricing, just to assist your pricing mechanism, that if you start adding VAT to your price, it may make your pricing not to be competitive, because what you to be charging is the penetrating price that can make your product to be attractive and you enter the market. So by the time you get to the market and you grow to that stage, you can now be charging skimming prices. But in a nutshell, that without confusing is that, yes, don't add it to your own price. I just brought in the other one when I say demand and supply side. You know, that is a culture. It's a culture because I believe that both these small businesses is a transition. At this level, by the time your business is growing, you will cross the threshold. But just know the fact that any item that carries VAT, if you don't pay that VAT, by the time you cross the threshold, be mindful of my language, is that those expenses that you acquired may be disallowed. Maybe I don't have even mentioned it since we are discussing small businesses, you know. But the truth is that on your client invoice that you send to him, don't have VAT. Don't have 7.5% of that value if you are still a small business. I don't know whether it's clear.
Yes.
No, be specific. It's not clear. The point of the position of the tax is that a small business don't even register for the VAT from the Federal Revenue Service. So you don't charge it with your price. So you can sell as many as you want. So your turnover will grow because your turnover is the function of volume. It's not,
Okay. So thank you very much. I hope, Ronia, that helped. We have somebody, I think Antoinette did send a message. It's a question. Is the FRC, I think I don't know what FRC is. Is the FRC a tax? Is the
No.
FRC a tax paid by professionals, sir? So I think that's the question.
No, the FRC is Federal Financial Reporting Council. Financial Reporting Council. You know, I don't want to comment on this body because there's a lot of issues that we are contending with them. But I think they are now part of the regulatory authority, you know, and as a consultant too, we are now even filing the annual report with them. So I don't get his question where he's asking whether they are what Financial Reporting Council is now the controlling. It's part of the ICANN that is monitoring the consultant activities.
Okay.
Most especially
Moving
the
on.
ones.
Please, do we have any other questions? Because I do not see. Okay, I see a hand here by Teyilese. Please, I'm sorry if I mess up your name, but Teyilase, please go ahead. Teyilase Atalabi, please go ahead. Teyilase, are you there? Okay, I think if you are there, please unmute because your hand is up and your mic is still mute. Please unmute, Teyilase.
Sorry,
Okay,
sir.
so
Sorry to cut, but there's a very
I don't
important
think
question on the platform, on the chat.
okay. All right. So I do have a question, sir. So my question is around, because there are different categories of persons here. There are some who are merely starters. In the creative industry, it's usually not this serious in terms of the kind of meetings we have. I think this year, this is the most serious meeting I've had, you know. And my question here is, for starters, the structure you mentioned, most creatives starting may not have all the structures you have said. However, they would like to comply to, you know, the narratives by the government. And that is one. For instance, you have the issue of SCOMO. SCOMO is supposed to be free. But you go around and you see some tax consultants still bill you a certain fee to be able to effect SCOMO for you. And they tell you, okay, that is one way they can assist you to maybe fast track things. So is there a way we can understand how, first of all, the new creatives, especially if they are solo, most of them are not more than who they are. It's just one person who knows how to do something. He doesn't have an organization. So how, and he's beginning to make, or she is beginning to make money. So from that sort of perspective, what would the person do? Then the second question is the idea of tax consultants charging for SCUMO when it's supposed to be free. Yeah.
Thank you very much. That question has been, I think, it's been on in the market now. SCUMO is free. It's free. No matter how micro that person is, if it's into trading, he must have a bank account. So, and then the bank, as time goes on, they will not open any bank account without that SCUMO. I want to use myself as an example. I collected my home in Kano. Then I traveled to the north that time. So we need to open a bank account there. And then we requested, in fact, it's the bank manager that said, Oga, this is our finance. I can't open it. So in a nutshell, they requested to see me. I sent one of my boss there. They said, no, we want to see you. We don't need your proxy. And then what they said is that this is your financial account that we just opened. You can lodge in any amount, provided you can explain it, because in our radar. So no matter how micro that person is the requirement for banking services. I'm just saying maybe they've not been enforced now, but later it will be an issue. But issue is free, not it should be free. The consultant that is demanding for, I'm just wondering how will he get it without the name, the account owner, you know. So that is with the area. If is he going to, how is he going to facilitate it? Because I myself am a consultant. I opened an account in my Abimbola Oluokun & Co. They said that account should not be open because they want to see me. And the counsel they gave to me is that, okay, this your account is very fine. You should not allow them to use it to transfer whatever. If you cannot explain the inflow, don't allow it to pass through your account. So with the SCUMO, and then that, let me sound it, our system is now data-driven. Nigerian Revenue Service is working in tandem with the CBN. CBN is working with GSS, and all the banks, wherever, they're now in the radar of EFCC. So the bottom line, the advantage of it is that open it, any amount that is going to let it pass through your account, provided you can explain it. But this of consultancy collecting money, I don't know. I don't know. But it's because how will you do it when you get there? Because his name is not on the, but you know the system. So I don't know. But officially, it's not right.
Okay, thank you.
Can I ask my question now?
Which is that Teila Chef? I called you there. Okay, please go ahead now. Yeah.
Okay, thank you so much, Mr. Abimbola Oluokun, for the wonderful presentation. My question relates to the capital gain tax. And I'm looking at, so can you shed more light as it regards the individuals? That's in terms of the individuals. I mean, since you mentioned that for the companies, it's the rate is 30%, So what is the position? Can you just shed more light on the, as regards the individual?
Yes.
Thank you.
Yes, you're right. Individual, if there's a capital gains, if you look at it, your percentage cannot be 30% because the gains that you made on that capital disposed, you have to bring it to the tax graduated rate. Do you have your biro there?
Yes.
I can give you. If you look at the tax graduated rates, right from 800,000 is 0%.
Okay.
0% followed by 15%. 15% is followed by 18%. 18, 21%, and then 23 to 25. Yes. So I don't know I don't know the value of that gain, but
How
if you
much
bring
is it?
it,
Do you have any exemptions in terms of value? Do you have any exemptions or any capital gain tax must be brought to that table?
it should be brought to that table. So it's a disposal of the assets.
Yes.
Yeah. So, but what we are saying is that if you are not a company, but you are paying
Yes.
your personal income as a rate,
Yes.
that rate, what will give you an effective tax rate.
Yes.
So by the time you bring it to that table, if you calculate it, it will not up to 30%. It can even be 15 or 18% because
Yes.
the tax graduate. So 30% for the company, but for the individual, it's not 30%. But now I'm saying that I thank you that because you maybe you understand it deeply. So, but
Okay.
it's 30% is for the company. I'm an individual. I'm not running, but I dispose my assets that I need to pay. You bring it to your own tax graduated rates because it's a personal income tax, the personal gain. But why, mind you, why that capital assets disposal may be enjoyed freely for company because it's 30%. Am I not convincing you? Are you getting it?
No, go ahead. No, go ahead. Go ahead.
So being an individual, let me concentrate on individual. Your percentage you are going to pay on that cannot be 30%, and you can put it to a test. That tax graduate, if you had it, maybe your percentage you pay on that capital gains cannot be more than 15%.
Yes. Okay.
Yes, so that's breaking of the law, and that
Yes.
is it. It's
Yeah,
not
well
30%.
Yes, I agree. Thank you. Thank you.
And then do you know how to determine that gains?
Yes.
If you have your asset disposal, just know the cost, know the depreciation to date. Then you now know that the residual value plus the amount that you get, difference of it is your gains. So it cannot be lost. Yeah, that's it.
Okay.
Thank you.
Thank you so much, sir.
Thank you, my brother. Yeah.
Okay. Thank you very much, sir. Because of time, we may not be able to, take the questions as we are taking it right now. We'll take further questions after the second speaker. But I must say a very big thank you to you, sir. So if you have further questions, you can still put them down on the text so that we'll be able to compile it, and we will be happy to answer the remaining questions after that. So we'll just take a very, very short music interlude. We are the creative, so we are not just all talk. So we'll take a short music interlude, and that would prepare us for our next speaker. But I must, on behalf of my president, my chairman, I say a very big thank you to you, Mr. Abimbola, for this time. Please be on standby. Some questions will still be directed at you, but we'll take a short music interlude, please. Thank you so much. Thank you, everyone.
Okay, everybody. Just like Mr. Andre has said, this is the creative sector. So we have to show a little bit of our talent. And we have a beautiful young lady who is a filmmaker and a spoken word poet. She's going to do a little presentation for us, just for us to relax and be ready for our second segment. Her name is Ire Bells. Ire, please do your thing. Thank you.
Good afternoon, ladies and gentlemen. My name is Ire Bells, and thank you for having me here. I'm going to be reading a short piece that I've put together. So I hope you enjoy this. Sit back, relax, and listen. This is what it means to be African, to pulse with the rhythm of life, brim with the divinity of light. This is what it means to be African, to commune as one in our rich diversity, lifting our voices, moving our bodies to the unspoken language that flows through our veins. This is what it means to be African. We are rich, fertile ground, bearing great fruits in bounty, We are mighty ocean waves rising in spite of the storm or season. We are the beauty of the rainbow spanning earth in all our splendor. We are power. The deep black of our skin affirms this conviction. We cannot be washed away, and we are here to stay. For even after centuries of tyranny and pain, we remained. Unrelenting in our ambition, enduring in our hope, in our joy, and our light. What a marvel it is to be African. We are a lineage of heroes and fighters, a culture that cannot be silenced or erased, because to be African is to be light, and light will always prevail. Our gathering here today is a calling to guard this legacy of ours, our creativity and our art, with ink and paper, policy and discourse. An African artist burns with a fire that cannot be consumed. Our passions drive us to dream without restraint. Yet somewhere between vision and realization, we forget to build systems that protect us. But what is legacy without continuity? What is creation if it cannot sustain its creator? Far too many burn in pain with unattained dreams. Far too many run this race with no safety nets in sight. Far too many slip away because their systems fail to work. So we must build up the change that we hope for. Ladies and gentlemen, I thank you for being here, because in your presence, you are reshaping what has been lost, rewriting the story for us with the power of shared knowledge, a true act of love. See, our change begins when we choose to lead with love, in the choosing of us before self, in education and in care, in building systems that protect, in ensuring our art forms, teaching our tax laws, offering ourselves for the greater good of all in service and in love. This is how we move mountains. This is how we mend broken systems. This is how we guard beautiful dreams and art forms, one act of love at a time. And in turn, what will become is a creative economy, an Africa that will live on for generations to come, her legacy protected in knowledge and in love. We can build the creative future of our dreams. We have every single thing it takes. And the change begins when we choose to lead with love. Thank you.
Wow, Eve Bells, that is a very wonderful, very, very wonderful spoken word. So
Thank
you were here
you.
all along, and I'm the one doing moderation. Yeah?
Thank you.
Fantastic. I hope everybody
Yeah.
liked that rendition. Yeah, you can make comments to her, and we can also give you access to her as well. Thank you so much.
Thank you as well.
We're going. Okay. We're going to go to the next speaker. The next speaker will be speaking on. Sorry, I'm just trying to get. The next presentation will be by Mrs. Juliet Okon. She's the head alternative channels and HNI in Leadway Assurance Company Limited. I'm sure the name already tells you where and what direction we are going with this. So we are leaving a bit of tax, and we are going to go into insurance, because the creative sector cannot exist without insurance. There's so many things that we do that would require some or a large level of insurance. In some of us here are event planners, some of us we do so many things. So Mrs. Juliet Okon, again, is an insurance expert, so she will be taking us through the insurance aspect of it, bearing in mind the theme of this, securing the future of Nigeria's creative economy, understanding tax and insurance for sustainable growth. So without wasting any time, Mrs. Juliet Okon, can you hear me?
Yes, I can hear you.
Okay, welcome, and the floor is yours.
Okay, once again, thank you All protocols duly observed. Thank you for having me speak to this amazing group of people. I'm just going to take my opening remark from some of the comments from the president, and I titled it here, Insurance Expectations. And I'm assuming that some of the things he mentioned in his remark are things that he hopes that we're able to discuss. When you think about insurance, you think about sustainability, you think about risk resilience. And then one very interesting thing that I noted was insurance penetration and some of the expectations. So insurance penetration in Nigeria is currently less than 1%. And you'd be surprised, seeing our population and all of that. But I'll also give some of the reasons why I think that, the penetration level in insurance is really low in Nigeria. Number one on that list is affordability. A lot of people either assume that insurance is expensive, insurance is, is not flexible to accommodate their income band. Another thing which is really key is awareness. And it's really good that we're having this session because this is one of the ways that we can create that awareness and bridge the gap. Because a lot of times when I engage people and when you speak to people, you see that there's a large gap in what we expect the insurance to do and what insurance actually really does in our day-to-day lives. Another thing that is a gap or that creates that gap is the trust. A lot of times when you speak to people, you can see that there's a huge gap where there's a distrust for the system as a whole. The industry, you hear people and their stories is really bordering on trust. There's no trust for the insurance industry here. Another thing that is also a factor would be distribution. Distribution in the sense that it's assumed that insurance only caters to the retail and the corporate segments, or the individual and the corporate segments. Meanwhile, we have mass markets, we have, the micro sector, we have the unbanked or the uninsured, so to speak. So distribution is also something that creates a huge gap. Now, regulatory framework is also something that creates a gap. However, the regulatory part, the body that governs insurance in Nigeria is NICOM. And I would say that in recent times, there's been a lot of things that have been introduced to see how insurance can be brought closer to the people and also to drive some form of enforcement to increase adoption. And then finally, one thing is cultural beliefs. A lot of times when I speak to people, I hear, some cultural myths jump out at me. People say, oh, God is my insurance. We have some clients that also think that, oh, they don't believe in insurance and a lot of things. All of these are all different factors that, limits people from either taking insurance, participating in insurance, or even buying insurance. But the top on that list is awareness, and this webinar, hopefully at the end of the session, we're able to, bridge some of those gaps. Now, another thing that I heard from the remark was creativity in terms of the offerings, the products that we put out there for consumption. I recall that sometime last year, I had a session with some creatives somewhere in Lagos Island, and we talked about extensively what can creatives do, how can creatives enjoy and, also, package something that is specific to creatives. And one thing that I would like to say is that it's not a lack of products that is the issue. It's probably maybe a customization issue, because most times when we get down to those conversations, you see that the products are there. They are just not customized in the name that speaks to a certain sector of the economy, say creatives, artists, and all of those. But we have generic products that can be repackaged to speak to those needs specifically. Now, going into the topic itself, I like that Mr. Abimbola did a lot of justice on the side of the tax, so I don't really need to speak a lot on tax. However, the products that I'll be speaking about are products that also help you manage what you pay out in terms of tax. So it's a form of relief. There are some products that we have that are packaged to help you with tax efficiency. And I'm just going to go into those. Now, I would touch on different products. Now, Leadway is not just involved in the business of assurance. It's a group. We have the pension, we have asset management, we have hotels, we have capital and trust, we have HMO. And so some of our products across the group also help you with managing your tax liabilities. So in the slide, I will touch on a bit of those types of products that you can take advantage of to reduce your tax liability. Now, something maybe before we're done with the session, I'll put the link there. If you go and you're trying to file your personal income or do your self-assessment, if you go on the portal there, like Mr. Abimbola mentioned, there are certain reliefs that you can enjoy. Insurance is also one of those reliefs that can help reduce your tax liability. And, I will tell you the types of insurances that can help you with those as we go. The next slide, please. Let's just go to the 4th slide. Thank you. So here, I've just bundled different products and that speaks to your different level of financial planning. So if you're planning towards retirement, financial planning, or estate planning, there are different products that can help you with tax efficiency. I'll speak specifically to retirement planning and some other products there. Now, under retirement planning, we have a product called Deferred Annuity Plan. We also have the Additional Voluntary Contribution. Now, it's assumed that, I would do that assumption, but please correct me if I'm wrong. The larger majority of people who are here, either employers of labor or entrepreneurs. So one way or the other, if you're an employer of labor, well, once you have a company that you have at least 3 employees, first you're entitled to take, or the Pension Reform Act actually mandates you to do group life. And by way of doing group life, you would have to submit and file pensions to the PenCom. Now, by way of doing that, you already have a pension account or an RSA account. So this additional voluntary contribution is additional to what you remit to the pension authority. Now, why I'm talking about these 2 products is that these 2 products are tax exempt. Any contributions you make towards your pension is tax exempt. Now, the deferred annuity plan, once we go into the details, the contributions that you make towards the deferred annuity plan, it's tax exempt because of the way it's structured and the way it's arranged. Now, please let's just go to the next slide. So I just go into the details of the product itself. The next slide, slide 6. Yeah, so the deferred annuity plan, it's a flexible retirement savings plan. It's for individuals with or without an RSA. Now, the way this plan works is that you are making contributions towards retirement. Now, I know that a lot of us might be saying, oh, but I'm still in my active working age band. I'm not retiring anytime soon. Now, this product, if I'm 30, I can take this product and plan all the way to retirement. Now, retirement age varies for different individuals and different companies. Some people, retirement age for them is 50. Some companies, retirement age for them is 60, 65, as the case it may be. So now, if you have a desired lifestyle or a desired income that you want to earn at, say, age 50, so what it means is that you are saving towards that retirement amount. So if 200 million is what you think is going to help you enjoy retirement, and be very, very comfortable. So you start from this age 30 now to start saving for that 200 million. What we now do with you is we work with you towards that amount. We look at your age, we look at the duration, and we're able to advise you and say, this is how much you need to be contributing on a monthly basis. Now, where this product gets interesting is that every contribution that you make towards this savings is tax exempt. Now, if you take this product in year 1, for example, and you have said that I want to be contributing 1 million on a yearly basis, what it means is that when you're filing your tax, you're doing your self-assessment every other year using, that link that I'm going to share now. When you get to the portion that says insurance premium, you would put this 1 million into that portion. And when you are doing the computation, you would see what the immediate relief is by the time you put all the different indices that Mr. Abimbola spoke about. So by the time you put your income, you put your rent, you put your HMO, you put your payee and every other indices that you have. If you have mortgages as well, mortgage is also something that there are some allowances that you can enjoy tax reliefs on. By the time you put this premium that you contribute on a yearly basis, you would also be enjoying some form of tax relief. So what it means is that in your active contribution years of 20 years, every contribution that you make towards this amount it goes for tax relief purposes. Now, what that means is that you are saving, you have your capital, you have the interest portion at maturity, and you also enjoy tax on those contributions. The voluntary contribution, it simply just means that outside of what is mandated of you as the employer-employee contribution, you are putting aside XYZ amount that is comfortable for you also towards retirement. And those amounts are all tax exempt. Let's skip to slide 7. So we go into the main details. So I've talked about what DAP means. DAP is the deferred annuity plan. Now, with every insurance plan that you take, be it investments or savings, you always have an element of life cover. Now, the life cover for this particular policy, free. It's 500,000. So it means that once you start saving whatever amount that you have decided that you want to save for X number of years, you have a free life cover of 500,000. Now, this is free. Somebody else can say that 500,000 is too small for me, it's not enough. You can always increase the amount to whatever is suitable for you, and then you pay the differential. Now, optional riders that also makes this policy interesting is that you can take a rider out to cover critical illness. Now, a lot of times when I have conversations, feedback, most times people always say that, oh no, there are some certain ailments that people think that is age bound. But these days you hear that somebody who is 20 has cancer, has high blood pressure, and those are critically ill or ailments that you can like to call it. This plan can extend to cover incidences like that. So what it means is that while you're saving and, planning towards your retirement, in the event that any of this critical illness happens along the way, you have a lump sum that is paid to you to help you, take care of those incidences. And I recall that at the last session I had with the creatives I mentioned, there are instances where, you see on social media, people come out and say, oh, this person, this veteran, or this actor, or this artist, or this person that is known in the public domain, they're doing contributions, they're asking for money, to help the person with one ailment or the other. If you have a plan that has a critical illness cover, depending on the amounts that you are taking as a lump sum, what it means is that in the event that this person is diagnosed with, say, cancer, that lump sum, if it's 50 million or 20 million or 10 million, is immediately paid to you to help take care of those critical illnesses. Now, accidental permanent disability is also another rider that you can take. And I always say this, that once you leave your house, point A to point B, accidents are prone to happen for one reason or the other that is above or outside of our control. So this is another rider that you can take. Now, you agree with me that if you're a creative, you're an entrepreneur, whatever line of business that you find yourself in the event where you are involved in an accident that incapacitates you, either it's permanent or it's something temporary, that time you're in the hospital, a lot of times, depending on how your business model works, you are not able to go about your day-to-day activity. It can result in a loss of income for you. And if you don't have something that also helps you cater to these incidences when they happen, it will set you back a lot of times. Now, you can also extend this policy to cover for your health. Now, a lot of times, people who are not in a structured 9 to 5, like paid employments, most times you see that they don't take their health seriously. A lot of people, if we do a poll here, not everybody has a health cover for themselves. Now, until something happens, that's when you know healthcare is really expensive. Just walking into the hospital, consultation, or just, some level of checks, you would see how much you spend out of pocket. This plan can help you load your HMO cover or your HMO benefits as you deem it fit. Let's go to slide 8, please. Can we move to the next slide, please? Okay. So, like I mentioned at the intro, entrepreneurs, employees, you can choose the contribution amount that you want. No, the slide before this. You can choose the contribution amount that you want. You can choose the flexibility of how you want to pay. You can pay it monthly, you can pay it quarterly, you can pay it annually or half yearly, depending on how you know your inflow comes in. Now, the risk premium is the one that speaks to the life cover, like I mentioned. The free life cover is 500,000. You don't have to pay for that. But if you want covers higher than 500,000, you would have to pay, an extra. Now, 100% of your remaining contribution goes into the savings. Now, you're saving towards retirement, like I mentioned. Now, something that is also good to mention is that unlike the regular savings and investment products that you would normally buy, the maturity benefit of this product is paid into two. You have two options whether maturity benefits can either go into. It can either go into an annuity fund or into your pension fund. An annuity fund, because like I mentioned, annuity, any amount that you put into annuity is also tax exempt. So what this product helps you do is that while you are contributing, you are saving monies on tax, and at retirement, where you are no longer in active employment, you are still enjoying some form of tax relief because that fund that has been matured into your annuity is also tax exempt. Now, I'm just going to quickly touch on how annuity works. So annuity works this way. You are age 50, age 40, and you are saying that I want to put this, and I have a lump sum. So I have 200 million, or I have 400 million, or 50 million that has been paid as gratuity, or, loss of employment benefits for me. And I want this money to be put into this fund for me. Now, annuity really works like salary for life. That's the easy way to put it. So we bring that 50 million, we look at your age, and there's a guaranteed period for annuity. Annuity is 10 years guaranteed period. What it means is that we will spread that 50 million, amortize it by your age and the 10 years. So what it means is that you might have 60 million by the time we're done with that computation. We spread it for 10 years and we pay you salary on a monthly basis. So every month you are receiving that, regular amount for 10 years guaranteed. Now, if that annuitant outlives 10 years, you continue receiving that amount till whenever death happens. That's why it's called salary for life. So you would agree with me that by the time I spread your lump sum for 10 years, you would have exhausted the amount that you brought into the annuity fund. But if that annuitant lives beyond that 10 years for another 20 years, it means that you will continue collecting that amount on a monthly basis for another 20 years. Now, there'll be exercises that will be done, periodically just to establish proof of life. They can do like a seminar or a webinar, just to gather annuitants together and, fill out some forms just to make sure that whoever I'm paying these monies to are still alive. So that's how annuity works. So this money and this DAP can mature into an annuity fund or a pension fund that also still pays you on a monthly basis. The next slide, please. I spoke about the extra protections that you can take, which is critical illness, accidental permanent disability. I've also spoken about the retirement benefit that is also tax exempt. You can convert it to an annuity. I've spoken about flexibility. Let's go to the next slide. Now, I'll stay on this for a bit. So while you are saving, let's say in year one, you have filed your tax and, you've gotten those reliefs. In year two, you did the same thing. And somehow in year three, you stop contributions. And this is a 10-year policy, you've stopped contribution. What it means is that first, if you say you want to cancel this policy for any personal reasons or financial reasons, as the case will be, because you've enjoyed tax rebates on this policy, there will be clawbacks on what has been given to you as relief. So if, for example, as a result of this product, you enjoyed tax relief for those 3 years to the tune of 500,000 or say 1 million, that 1 million will be clawed back from the contributions that you made, because it's assumed that you're taking this product for retirement purposes. And if you're pulling out for any other reason, those benefits that you've enjoyed by way of reliefs will be clawed back. However, if you say that I don't have money to continue with this plan, but I still want to leave the money till maturity, meaning that you are stopping to contribute in year 3, but you're leaving that money till year 10 when it matures into an annuity or a pension fund. That money will still continue to earn you interest, even though you're not contributing, but there'll be no further tax reliefs on it because you are no longer making contributions. 11 just speaks to the minimum contributions that you can make either on a monthly basis. Can we just skip to slide 11? Okay, it just speaks to the minimum you can make. More is the annual contribution. Then on this, I'll just to the next. Like also add that your business and your return tax rate. Now, next, slide 13 also speaks to a product that can help you in terms of protection while you still also enjoy some form of tax reliefs. Slide 13 is a product that we call Family Benefits Plan. And how Family Benefit works is that, Juliet, now I can decide to take a policy to cover me in the event of death. And that policy, I can also extend it to my mom, my dad, my parents-in-law, meaning my father-in-law, my mother-in-law. I can add them under that plan. So I'm the primary policy holder. I can add my in-law and I can add my parents. And, you know, what am I covering there for? In the event that anything happens to them in the form of death, I'm the primary policy owner. So what it means is that if I lose any of my parents, whatever sum assured or lump sum that I've taken against their lives will be paid to me. Now, let's look at it in the traditional African setting. If you're a first child or you're a second child or you're the breadwinner, in the events where you lose a parent, the onus falls on you to take care of the burial expenses and all of that. Basically, this product is helping you put aside funds that now makes a lump sum available to you in the event of a loss of either of those parents. And you would also bear me witness that if you are married and you have, in-laws, in events where your in-law passes, you also have some financial responsibility towards, the burial or the final expenses. So this product is just packaged in a way that you can take that policy and plan ahead. Now, we have different durations that you can take this policy. Minimum is 5 years. So the way the product or the way this policy works is that you make contributions into the policy for a minimum of 5 years, and then, it's now a waiting game. So what it means is that if I take the policy against my father, my mother, my mother-in-law, and my father-in-law, and I say, in the event that any of them dies, I want Leadway to pay me 10 million each, and I've paid premiums on a yearly basis for 5 years, I'm just doing a waiting game. So if 10 years down the line now, death happens, all you need to do is to notify Leadway that person has passed, and that money will be made available to you because you are the primary policy owner. Now, it's a waiting game. So you can have this policy for 5 years, and death doesn't happen on any of the lives that you have covered for another 10 years or 15 years. As far as you have paid up the premium, in the event that it happens, you can always come back to claim. Now, while this is also important for tax relief purposes, and why I put this here is because every premium, like I mentioned for the DAP, that you pay on a yearly basis to the insurance company can also be considered for tax relief purposes. So when you're filing your annual tax returns, when you do your self-assessment, when you get to the portion that says life insurance, the premiums that you pay for this policy can be imputed there and it'll be considered for tax relief purposes. And like I mentioned, you can have a number of lives under this policy. Some people can say, oh, I want to add my children, cousins, or distant relatives who are also, aged or the elderly side. You can add this policy. We would take all their details. I'll show you in slide 15 the minimum requirements that we need to, run a quote for you. There's no minimum amount. Whatever amount that you like to take for the lives. And again, I always say this, that there's no value to human life. So while somebody might take this policy and say, oh, just give me 500,000, somebody else can say that, oh, I want 50 million per life in the event that something happens to any of the people I'm choosing to cover. As far as you're able to pay the premiums for the sum assured that you have chosen, you can take as much as you want. Please, slide 15. Now, so if you're taking amounts that are less than 7 million per parent, you would not need to do any form of medical underwriting.
Mr. Andre.
Okay, madam, thank you. Sorry, my network keeps jumping in and out. And,
I wasn't sure if it was
yeah.
Okay.
Okay, thank you, Miss. Thank you,
Yeah,
Mrs.
so,
Okon.
okay. So if you're doing premiums less than 7 million, you would not need to do any form of medical underwriting. However, when once you start picking so that the cost of one was leadway. What we'll do is we'll give you a letter, you leave a letter to the closest medical center to you, test, and the result is sent to us. We're able to cover you for life under. Now, I will quickly skip to slide 19. Slide 19 speaks to the business side. So entrepreneurs, how can you protect business, the types of insurances you can take, to about the risk that you're exposed to as entrepreneurs or as businessmen and women here. Okay. Yeah. So this is insurance and creative. So these are some of the insurances that you can take. But just like I mentioned at my intro, insurance exists to help you with risk management. It helps you with business continuity. It helps you to boost your credibility. It helps you with financial security. And ultimately, insurance exists to give you peace of mind. Now, you'd ask, how does insurance exist to give you peace of mind? By the time you're not worrying about, the risk that are involved in your business, in the event where something happens, what's the business continuity process or the business continuity metrics that you have in place to ensure that business continues as is in the event that something goes wrong. You would see that by the time you have an insurance and you have an insurance partner that is taking care of half of this risk or most of this risk, there's peace of mind. We'll just quickly go into some of these insurances and, I'll give you scenarios how insurance can come through for you. How insurance can come through for you as a business. Now, so we have liability insurance. Liability insurance really is an insurance that every business person should have, and it covers you in the event of negligence for third-party injury, property damage, or negligence. So if I walk into your office, for example, and I did not see a watch your head sign or, signs that help me avert risk. In the event that something goes wrong in your premises, the liability insurance is an insurance that can indemnify you on behalf of a third party that comes into your premises. Now, it also covers public liability. Public liability speaks to third parties, meaning that if I don't work in your company or I don't work as a staff under you, anything that happens to me within your premises, I can sue you or I can claim for damages. And if you don't have a liability insurance that helps you with this, you're not able to bounce back from costs like this. Now, it also protects you in the event of legal costs. Like I said, a third party can sue you for damage that happens on your premises, and they can demand compensation, and it can span from very little to very huge amounts, depending on the caliber of people or persons that you deal with on a day-to-day basis. And the scenario I gave here, if you're an event planner and a guest, just as little as a trip and fall due to either a cable that was not properly kept well, and the person has an injury and I need to go to the hospital. First, you incur medical expenses, because if you are dealing with somebody who is, highly placed there, first they tell you, I want to go to a very, very huge hospital, maybe Evercare. You already know how much you're going to spend in terms of medical expenses. Now, the person can be so irritated to the point that they just feel like this company was just unprofessional. I want to sue you. Something as little as that trip and fall, it can escalate to several other incidences that you're not prepared for. And liability incidences like that. It covers you in the event of a legal cost, liability as a result of third-party damage, accident, property damage on your premises as a business owner. Even if you are into construction or whatever business field that you find yourself in, but once you have people who are not necessarily your employee, a client is coming for an inspection and something happens in your premises, you are liable to take care of whatever instances that comes as a result of that, negligence on your part. Now, the next slide speaks to another type of insurance. Can we just skip to the next slide, please? So we have equipment insurance. Now, depending on the type of business that you deal in, if you are a filmmaker, it means that you deal with a lot of equipment. You have your lighting, you have your cameras, you have so many heavy and little equipment that you are dealing with. In the events where you are doing a production and something goes wrong, there's a spark and your camera goes bad or something goes bad, just any unforeseen incidents that happen, that's a damage. It could be fire, it could be theft. Somebody, maybe a crew member, can steal one of your major equipments and it sets you back. It means that production will have to wait. If you don't have a backup, you would have to incur monies to spend in replacement. If you have an equipment insurance, it covers you against damage. It covers you against theft. It covers you against damage to a third party who is also, so if I'm using your equipment and there's an incident, your equipment insurance covers all of those. So for example, you're a photographer and your camera is stolen from your vehicle. It's not even on the site this time around. Maybe you stepped out to buy something and your camera is stolen. Your equipment insurance can cover replacement costs for that equipment that's been stolen. Now, we have a lot of filmmakers and a lot of creatives that deal with heavy equipment, like I've mentioned. Some people with drones, you have to use drones to get show things and all of that. You would imagine that you assemble a production site and you have equipment worth of 200 million and you don't have any form of insurance to cover that. You leave the production site, you go home, you come back and there was a fire incident and you're not able to salvage anything. 200 million worth of equipment has just gone down the drain because you don't have any form of insurance to cover that. So you can take equipment insurance for very little to huge equipment that you work with as creatives. The next one speaks to interruption. Like I mentioned, interruption can be as a result of different incidences beyond your control. The same example I gave, you've left the site, you've gone home, you've retired for the day, and then you come back, there's a fire incident or there's flood or something, natural disaster that is out of your control. It can be something that can be quickly fixed. It can also be something that would delay production for, say, 2 weeks, set you back for 2 weeks or 2 days. Now, for people who deal with artisans that you have to pay or, staffs that you need to pay on a daily basis, it can lead to loss of income. So those number of days where you're out of work or you're out of production, you're not working because an incident has happened, your business interruption insurance can cater to those incomes that you lose in those instances. So if you're expecting to have made income of 2 million or 20 million in those 2 weeks that you're not working, your business interruption insurance will be the one that now pays you back. So you recoup those monies that you have lost as a result of the business that has been interrupted by one cause or the other, be it natural disasters or fire. Now, the final insurance that I'll be speaking to, or type of insurance that I'll be speaking to, is, please, can we just go to the next slide, please? Professional indemnity. This is very, very, very important. And I say it's important because if I'm a client or an investor and I'm looking to partner with your company, I am coming into the agreement with you with the assumption that I'm dealing with a professional. So once anybody deems you as a professional, be it that I'm coming to you as a consultant, I'm coming to you as a screenwriter or a script writer, you are an expert in that field where you have chosen to play. And if any negligence comes as a result of me relying on your professional advice or your advice as a consultant, there's a negligence. I can sue you to the tune of whatever that project is worth. And if you don't have a professional indemnity insurance, you cannot bounce back from such incidences. So if I've contracted you, and I'll try to give an example. A lot of us would have seen the incidents with the Chimamanda case that was on, with a child. Now, there are different entities that were involved. There was the hospital, there was the, the lab, and there were the doctors. Now, if those doctors did not have a form of insurance, or the entity did not have a form of insurance, they are currently in a legal battle now that can be drawn for God knows how many years, depending on how the person is willing to take it, how far the person is willing to take it. First, professional indemnity covers you for the legal cost. Like I mentioned, it depends on who you're dealing with. You can be dealing with somebody who is just, maybe a Gen Z who's just starting life, and they might not necessarily know the extent to which their rights or the extent to which they can request for compensation. I'm dealing with somebody who's so learned and who's so exposed that knows that if I sue you for XYZ amounts and I can prove negligence, I can get compensated to the tune I'm requesting. Imagine that you don't even have the very minimum, very bare minimum, insurance to cater for this, and you are a professional and you're running business and you're having those dealings, in the negligence as a result of advice or that your staff, and it doesn't have to be you as the company owner. It can be somebody who works for you. Anybody who works for you is deemed to be your representative and is deemed to be, an expert in that field. So if I'm giving advice to a client, and because of that advice I've given to the client runs into one loss or the other, and they come back to sue the company. If the company doesn't have an indemnity cover, you would be back either as a business. You can even close down if you're not able to, take care of those losses. So when I was listening to the remark that the president made, I was happy that we have some of these insurances that can help creatives guard against, losses, guard against incidences in events where you are carrying your day-to-day activity. Now, these are products that are specific to creatives. Now, it doesn't, we have some other generic insurances, which is like if you own a car, you would be expected to have a car insurance, be it third party or, a comprehensive. Now, if you live in a premises, you're expected to take at least a fire insurance to cover your assets if you're not the owner of the premises. But if you own the building, you're expected, and even the NICOM and the federal government, they've also signed a law with the NERA Act that mandates people to actually take insurances, whether you are a tenant, you're a landlord, or, otherwise. So we have different insurances, but like I mentioned, it's now looking for how to coin those insurances to channel them to the right groups of people. So I'll pause at this moment and I'll take questions if there are any. If you have clarifications that you need for something that is not covered here now, I'm happy to give you those clarifications and take those questions. Thank you so much.
Wow, thank you so much, Mrs. Okon. This has been very, very insightful. I don't know if I can grab everything in one webinar, but it's been a lot. I mean, there's so many places I want to ask questions, but let me leave me first. But I would have to open the question and answer segment. It's a very short segment because our time has been really far spent. But I hope you wouldn't mind us still sending you some questions to your email. If you do answer them, we'll still be able to share them with the members here. But we're going to take at least 3 questions for you, just to be fair. 2 from women and 1 from I'm always against the men, if you notice. So, so I'm going to take 2 questions. But however, if you do have a question, please show by raise of hand. So, okay. Ronia, so let's just give you the floor so that we can run with this immediately. Please go ahead, Ronia.
Thank you. Thank God I have questions. No, what I just wanted to know is I couldn't find anywhere the amounts we need to actually deposit in order to unlock these insurance benefits.
Okay, so that's one question. So, madam, you just hold on. So let's just lump up the questions so that you can just, so that you can just respond. So let me still check if any other person, please raise your hand. However, I'm still going to just check the chats. Okay, so please respond to the question since I do not see any hand. Please go ahead, Madam Okon.
Okay, I think Kingsley has a question. If you can drop the question in the chat, we'll take it. So for the minimum contributions, so for the DAP, we have the minimum contributions in the slide, which will be shared. But for the other products that we spoke about, so if you're going to do an asset insurance or an equipment insurance, for example, you need to give us a list of the equipment that you want to cover. once you give us the list, we're able to give you a quote. So it's not like a fixed pricing. So based on whatever information that you provide to us, we would use that information and compute a quote, and we will share the quotes with you. Now, if it's a life cover that you are taking, like I mentioned, we will need the duration, we will need the amount, and your age. So your date of birth, the amount, and the duration, and we're able to give you a quote. And then if you also stipulate the frequency of payments, if it's a monthly payment you want to do, a quarterly payment, we're able to give you those options of payment. So you see whatever is flexible for you.
All right, we'll take
that
a second.
answers your question, Maria.
Yes, I guess I missed where you showed the DAP minimum contribution. I'm going to go back to the slides.
Okay.
Okay, so we'll take a second question from Wilfred Oluku. Please, you have the floor, Wilfred Oluku.
Thank you very much. I not really a question, but a testimony on insurance thing that she has just presented. I have been a beneficiary for both the family benefit and the home insurance thing that now that she has said. And I had an incident in my previous place of residence where I had a fire incident, and it came true to their words, because I actually was, I thought it was a joke, because when the marketer came to me and said, "Oh, this works," I said, "No, insurance company, people always say insurance is, God is my insurance." But I took a stand, and at that point in time, it was just 5,000 naira for your home insurance. And I did the 5,000 naira for 1 year, and I paid, eventually she paid, because she wanted to prove that it was real. So she paid the 5,000 naira. 3 months later, I had an incident, and the money came. I was so relieved. I gave her twice the money back because she saved me a whole lot. So I think we should tie into this. And I have been marketing it to people. I'm not an insurance person, but I've been marketing it to people because it's true. That's my testimony for that. So good one. I encourage us to do the same.
Thank you so much. It's good to have, let me not sound like a church, but it's good to have witnesses, when it comes in here. So, Madam, so it's a clear indication that at least it's a black man that is speaking. If it's a white man now, we'll say...
Sorry, I also forgot to add, sorry to cut in, that I did the same insurance for my mother-in-law and my father-in-law, and my mother-in-law has since passed, and they became true too. They paid.
Okay,
Yeah.
Thank you so much, Wilfred. Thank you. So, we're just going to see if we have one more. But, Madam, I have a question, because I'm a very curious person when it comes to insurance. Just because I don't see any other hands, let me ask. A lot of Nigerians doubt that avenue or that sector, because experiences would always counter what we see. Because sometimes, yes, you do pay your whatever the insurance values are, but what are the very easy processes to make your claim on time? Because, for instance, you mentioned something about equipment, and your equipment is damaged. So do you have like a turnaround time to help the business going? Because our challenge usually is that a lot of people don't believe, because they feel the timing is not accurate. So if you can answer that in 1 minute, so that we'll be able to round up.
I mean, the right thing to do immediately it happens, you should reach out to either your relationship manager or the insurance company. So most insurance companies, they always have a customer service email. You can send an email to the customer service email if you don't have the person, and just state what the incident is. Just in very simple terms, this equipment has been damaged. If you have your policy number, you quote your policy number there, you put the description. It's always very good to have a cost. So if it's something that needs to be replaced or repaired, if you have an estimate, you can put all that information. Normally, once you have made that notification to the insurance company, if it's something that has to be replaced, we would look at the market value and give you an offer. Once you sign the offer, we pay you. Now, if it's something that needs to be replaced, like I said, you also get a repair cost. We also have in-house, adjusters, engineers, and experts that also would look at the cost and say they either negotiate with the repairer to get a discount. Once we have that agreement, we give you an offer and then the claim is settled. Most times, what always drags that process is, first, you don't report the incidents on time. Secondly, you don't provide documentations on time as well. If you don't give it any documentation or information, we're not able to adjust or ascertain what has happened. So once you're able to provide the narration of the loss, the estimates, and we're able to come to an agreement, that process can take between 24 to 72 working hours as the case may be. So if you're able to provide information, you're also able to treat and get back to you so that you can continue business in no time.
Okay. Because of time, unfortunately, we can't take any further questions. Our time has been really far spent. I really must appreciate you again. This is not a vote of thanks. I'm not the one doing that, but I'm just going to appreciate you, Madam Okon. I'm going to appreciate you, Mr. Olu Okun, for your time. Thank you so much. So we're just going to go to the vote of thanks. I want to call on Madam Chairperson, Ambassador Ibru, to please go ahead with this segment. Madam
Sorry, is there
Chairman.
a way we can contact the two speakers today for further questions later on? Maybe they can drop an email.
Yeah, definitely. Definitely. We would share this information with you. If you can drop your email address, which I see you've already done, we'll share it with you, please. And every other person. Yes.
Sure.
All right. Madam Chairman, the floor is yours, ma'am.
I'm here. Okay, everybody. Mr. President, our beautiful DG, I want to thank you and everybody that has participated, Mr. Abimbola Olokun and Madam Juliet Okon. We appreciate your time, your effort, and your education. We called on both of you at short notice, and you were able to come through for us. We do appreciate everything. And I just want to say thank you to everyone who has participated. Please note that our secretary, Adebimpe, has dropped her email address in the chat box, and you can extract that and send all your information to her questions, and she can forward the slides to you. And any other questions you might ask, we can share the information of our guest speakers to you at your request. Thank you, everybody. We do appreciate. Thank you, and God bless you all.
Thank you, Madam Chair.
Thank you very much, Madam Chairman. Thank you so much. So we've come to the end of this very wonderful webinar. We'll say, as you continue about the day, God bless you in your activities. We would continue to engage, and thank you so much. Have a good day.
Thank you,
Thank you very
Andre. Thank you.
Thank you, everyone. Thank you.
Thank you, everyone. I'm Adebimpe. If you have any question, my email is on the chat box, adebimpe.amino@lagoschamber.com. Thank you.
Thank you, Adebimpe.
Hmm? I think we are.
Ẹni tí ò bá mú mẹ̀mẹ́ ń tòótọ́, ká máa ṣe bó ṣe wù. Bí àbẹ́ máa jẹ́ kí n mú ilé ìdání, orí mi ì ní fàn. Kí ni àárọ̀ fún madam yìí o?
Báyìí.
Ogun. Ó sì tọ́jú mi, sẹ́ńtà kí ni èmi kọ́ lè sẹ́ńtà yẹn ní social media and then community. Tẹ́mi náà bá ní nǹkan ṣe, àbí? Àbí wá ní ìwé. Gbogbo ènìyàn ò bẹ́ẹ̀ ni o. Àlẹ́ máa wo TV mi lọ, pálẹ̀ tí 3:30 màmá ló dé. Ó ti yẹ yìí. Máa ṣe kí lọ. Mo fẹ́ relax ní kó máa lọ. Bá ti mú ní mo sọ ẹ́ tó mọ̀ lọ, ó yẹ kó ní kí n máa lọ ni. Ẹ máa wá wé àná.
Wọ́n ń ṣe virtual meeting. Àwọn aráàyè ọ̀pọ̀lọpọ̀ òòrùn láàyè. Yeah, cotton ball. Huh?
129. Ló wọ́n á pè rà.
Tani? Wọn ò bẹ̀rẹ̀ mẹ́tì.
Wọ́n pàdé ládá. Pé
Queen Nọzọ pẹ̀lú. Queen Nọzọ náà. Queen Nọzọ.
sí kí ni?
Rising Lighters Kẹ́mi.
Ibi kan ti ṣe nìyí.
Church ni.
Church ni fẹ́, ó dàbẹ̀ Anglican Church ni. Bí NGO onímọ̀ ẹ̀ ń mọ̀. Wọ́n ní látàrí yẹn tó ṣe yẹn tí Sanwó-Olú wá sanwó owó fún àwọn ọmọ yẹn ní scholarship. Pé kò sọ́n láwọn ọmọ yẹn àwọn míì ní wọn ọmọ aláìlóògbé ni tó yẹ wọ́n ń tún ayé wọn ṣe tó ń develop tó ń sanwó fún wọn ní scholarship wọn wọ́n lè lọ sí. You didn't call me now. I was expecting you to call me up, madam. Yes, ma'am. Can we start now? Oh, okay, let me go back and call me. Yes, okay. I am so sorry. I was thinking of the waterfall that we normally see. So, okay, so. We're here, Madam Chair. Here.